President Xi Jinping took charge and made a key speech at China's recent 5th financial conference. What will this initiative mean for the next steps in China's financial reforms? Overall debt has been soaring in China, and Chinese officials are quick to acknowledge the importance of financial health to the economy. How big are China's current risks, and what measures can government take to minimize dangers? China will set up a State Council committee to coordinate regulatory policy, and the central bank will have a larger role to play in preventing systemic financial risk. Why is China setting up the new supervisory committee now, and what changes will it bring to China's economy? The government said it will work to improve the financial sector's capabilities to serve the real economy, which has suffered next to financial and internet investment. What challenges will have to be overcome to strike the balance the regulators hope to achieve?
At the National Financial Work Conference held in Beijing from July the 14th through the 15th, Chinese President Xi Jinping called for stronger financial regulation to contain risks. The country will set up a committee under the State Council to coordinate the regulatory policy, and China will continue to deleverage the economy by firmly steering monetary policy and reducing borrowing in state-owned enterprises. To discuss the complex issues related to China's financial reform in the coming years, I'm pleased to be joined in the studio by Andy Mock, Managing Director of Red Pagoda Resources, and Lawrence Brown, co-author of the book One Belt, One Road, The Creation of a Megatrend. Yuping Kang, Chief Economist at the Changjiang Pension Insurance, will join us. That's our topic. This is Dialogue. I'm Yang Rui. Gentlemen, the focus, I'm afraid, is why President Xi Jinping decides to set up a supervisory committee at this moment to further regulate the financial industry.
Well, I think the first reason is that China's financial sector, first, is very large. It's also complex and becoming increasingly more complex with new products such as these so-called wealth management products, as well as internet-enabled financial services and products. So I think the need for a fresh look and a new structure for financial supervision in China is required.
Size does matter, Lawrence. Do you think this is the size of the Chinese market that leads to the decision by President Xi Jinping to further reform the state-owned financial industry and also to crack down on online financial crimes?
This could be understood in two words: stability and resilience. First of all, there's an intention here to stabilize the Chinese economy through financial reform and financial supervision, and of course resilience because of concerns over potential volatility in global markets due to some of the policies of the Fed and the effect of these policies on the global market, on currency. So the combination of these things, I think, is emphasized by Xi's words that financial stability is national security. It's really a very careful macro control approach to the economy to try and rein it in and create, again, financial stability and long-term security through stabilized growth rather than having a extended debt-driven growth which can create financial volatility, instability, and market crashes. That's the one thing China doesn't want, is any big surprises. It doesn't want any black swans.
Now, gentlemen, why do you think the PBOC, the central bank, is authorized to play a bigger role in the process?
Well, I think someone has to take the lead. And of the four agencies, so it's the People's Bank of China, the Insurance Regulatory Commission, the Securities Regulatory Commission, and the Banking Regulatory Commission, there has to be a lead agency. And I think that both for historical reasons and also just the central role that central banks play in any country's economy, that the PBOC is designated the lead agency.
Perhaps we should add
organization.
We should add a little bit background information to promote the understanding of our viewers about the complexity of China's banking industries and the regulatory work that we have so far done. It seems in the previous government and Hu Jintao and Wen Jiabao, decentralization was the key word. But since the 18th National Congress of the CPC Central Committee, Mr. Xi Jinping took charge of everything, right? It's obviously a concentration of power, and that has drawn a lot of criticism from the international community.
Yeah, we have to go back to the background of this. The first Central Committee Financial Working Conference of this nature was in 1997 during the global financial crisis at that time, or the Asian financial crisis at that time. And again, they've had every 5 years a meeting, and following, of course, was a 2008 financial crisis globally, which occurred on the back of extended debt, particularly from the American side, the overextension of our entire financial system.
Are you suggesting that we have learned a lot from the financial crisis back in 2008?
Exactly.
Financial derivatives.
Exactly. This is going back to 97, and it's going back to 2008. And here we are 10 years on with the potential of another financial crisis. We had 8 years of quantitative easing, which is basically pumping money into the American economy, creating a debt-based economy, and total reliance upon really, 80% of the American economy today is really capital market arbitrage. Only 20% is trade and services. And a very key thing that she has said in this meeting is it has to be financed back to basics, it has to be back to a real economy, and we have to be able to offer finance to that real economy, not into a debt-based bubble economy. And in this, it's again resilience against the risks of another financial crisis globally, which is just around the corner.
And I think the key thing to emphasize here is the support of the real economy. Because when we look at what are the causes of some of these financial crises, one way we could look at it is that the financial sector has became too large a part of the economy and was serving its own interest in terms of maximizing profits for the investment banks, the
without
mortgage
using
brokers.
without using the funds to make investments in return.
Exactly.
Well, making investments that drive the real economy. And to go back to first principles here, I mean, why do we care about a financial sector? It's because it allows capital to be mobilized, meaning that we can aggregate money and then direct it towards projects that either create jobs, create goods that people actually want to buy. And that what we kind of lose our way, as the U.S. did with the financial crisis, is that the financial service industry existed to kind of make money for itself, not necessarily to advance the real economy. And I think that is one of the central points that President Xi emphasized in this national finance conference.
I'm afraid what Lawrence said a couple of minutes earlier seems to suggest that we are getting very close to the doomsday, the end of the world, since he said every 10 years we would have a financial crisis. Look at what happened in 1997 in Asia, and then 10 years later in Wall Street, and 10 years on, here we face another possibility of having systematic financial risks in China, if not a hard landing in reforming the flawed financial industry. Does it mean this is just a matter of cyclical or structural problems?
Well, first of all, I think that you have had a 10-year cycle. So we're looking at a situation, as Mr. Moxtia said, where you have had an inflated market in America based entirely on financial services for financial services, with quantitative easing funding going into financial services and bubble tech stocks not going to the real economy. And that is exactly what I think she wants to build resilience against. So the entire focus here is real economy, back to basics. Even today's market reflected that. Your tech stocks in China have had a major correction today. However, your real economy stocks have remained stable, and that market has been solid. And I think that in this, we're looking at long-term financial stability and the apprehension and measures being taken against global volatility, which is on the horizon.
What do you think of the ratio of M2 against the gross domestic product? It reaches 260% of the GDP. Is it too much? And it's indeed a financial test. I mean, it's a big challenge.
I mean, M2 is a part of the money supply. What is one definition of the money supply And typically, according to classical economic theory, is that when you have too much money, you see inflation, right? Or inflation picks up, starts increasing. And I think we're seeing, in fact, the opposite of that in China today. I mean, inflation is between 1% and 2%. I think the government would actually see it closer to between 2% and 3%. So looked at by that perspective, money supply doesn't seem to be a problem today, in my view. I don't know if you might have a different take.
What do you think of the issue of liquidity?
I think, first of all, what is going to happen now is going to be a retrenchment taking place in the economy. We have now a deleveraging process that's going on, and we have now the introduction of macroeconomic controls that really harks back again to 1997, to the Zhurongji era. And it goes back to your earlier question, is why is the central bank going to lead? Because the central bank is, in fact, the main monetary policy authority. And so it's time for them to step in and to regulate the economy on a macro level, and in turn control the three financial regulatory bodies. Because right now the three financial regulatory bodies, for commercial banking, insurance, and securities, are not coordinated in their policies, and in many ways are working not in tandem and have different interests.
For years, it seems that the problem that China has been facing is not that we don't have enough regulatory bodies or watchdogs. It's that they pick turf battles. I mean, they fight for their own turfs, they fight for their own spheres of influence. So there's a strong appeal for further coordination. Is that the broad background against which there's a super oversight committee is to be set up?
Macro control and coordination between different bodies or different interests has been the key to the success of China's economy. And when macro control is not there, that's when you have a deregulation, or you have a, can we say, free-for-all. And there's a Chinese saying, to grasp everything and hold it, then everything will slow down, but to release it, it goes into a sort of chaos. And so there's always this balance and rebalance between marketization and macro control. And now it's just time to rebalance back toward more macro control. That's what we see happening, again, in apprehension of global volatility and risk.
Real quick, I would just want to say, but the flip side of that, too, is that when you don't have sort of an overarching regulatory body, you have this so-called regulatory arbitrage where, say, the CBRC is very strict, but then companies will say, well, what if we called this an insurance product, but it's really a loan? And we can see with Anbang and some of these other insurance companies that that's how they financed a lot of their M&A activity. So without some overarching body, you run this risk of money people that financiers are smart, they find the path of least resistance. So I think
look, we have the formidable presence of the SOE sector in our national economy, and we have the questionable boom of the SME enterprises in the non-public sector. So it seems that the policymakers in this country are always wrestling with the idea as to whether market forces should be trusted to play a pivotal role in reallocating resources. Now, what's wrong with this process? Time and again, the Chinese authorities have been thinking very hard as to whether we should trust more of the market. But now it seems we're moving back.
Macroeconomic control as a policy is balancing market with the need for intervention. It's not saying that market fundamentalism, the market will always in of itself correct itself. That won't happen. It's about balancing between opening up the market and, when it's not working, intervening. And that has been the success of the China model, and it was the failure of models as in post-Soviet Russia, or even as we've seen in our own country in the United States, where there was total deregulation under the administration of Bill Clinton and then later George Bush Jr. And of course you had market collapse in 2008. So actually it's a question of balancing. It was Deng Xiaoping who said markets need planning, and planning can have markets. There's actually no contradiction in this at all. It's a question of good management. That's
Andy,
all.
what do you think of the immediate response from the stock market towards the announcement that we're going to set up a supervisory committee again?
Well, I think sentiment was largely positive, right? Because, I mean, when you think about...
To my knowledge, the market fell back.
But it was up days before that as well, as I think on a net basis. I mean, I think that it is largely there were no surprises, but perhaps slight disappointment, because my understanding was that a lot of investors were looking at hoping for the formal announcement of the merger of these four departments or agencies. But I think the announcement that came out was a coordination committee was seen as maybe not going far enough.
And at the same time, President Xi vows to deleverage the SOE. Now, what do you think of the performance of SOE? Is it a drag on our economy, or do you think it is something that the ruling party has to rely upon to stabilize the financial industry?
I think the entire debate that has always gone on with the SOEs is how they should be managed. If you're going to bring back the best and the brightest of, financial business managers, but you have the party intervening in the SOE to create a sort of administrative control, maybe then it doesn't function like a business, that functions more like a ministry. This has been a perennial debate back and forth. I think certainly one of the big concern here is over-borrowing by the SOEs from the banking system and overextension to too many projects and to too many things at once. And that was a policy that lasted throughout the previous administration of Hu Jintao and Wen Jiabao. Now I think we're looking at deleveraging, we're looking also at pulling back, we're looking at stabilization of growth, and these are the priorities of Xi. Again, finance is about national security. I think he set the tone.
What do you think of the omnipresence of the ruling party, even in the SOE? Xi Jinping says over and over that the Communist Party of China must be empowered and authorized to play the leading role, the absolutely unconditional leading role in regulating the economic behavior of the entities in non-public and public sectors.
Well, I think, if we look at it from the perspective of a global investor, I mean, clearly it's a very controversial statement, but it's hard to argue with success. I mean, we look at the track record, as Lawrence was saying, of economic reform and opening since '78. The system here has been, the party is leading, it is setting the framework, the rules, and sometimes getting, very involved at a micro level as well. And that's delivered double-digit GDP growth, even now with 6.9% for this first half, which is better than certainly most developed economies in the world. That, if we look at past history, it seems to work.
Well, it seems to be working, but a skeptical Western audience would point out whether the ruling party itself should be looked at carefully. But President Xi Jinping says those at the local level in particular who apply endlessly for loans must be held accountable all their life. I mean, is that a stern warning? Will that prevent the local government officials from undertaking mega projects, because that will lead to the undoing of what they want to achieve, or what they want to achieve?
It reflects back on the words of Zhu Rongji back in the triangle debt crisis in the 1990s, when he said, those of you who can't pay your debt, go bankrupt. And it shocked the market. But I think here what's happening is, again, Xi is using macro control, stepping in and saying, look, we cannot overfund, we cannot create debt that cannot be paid. If you're going to borrow, you have to pay back your debt. And if you're going to be lending, you have to be able to know who you're lending to, and you have to have security for it. And I think this is going to cool down the economy, but it's a necessary step, because you can't go forward with either the globalization of the yen currency, which is on the agenda, or the building up of the entire One Belt, One Road policy, unless you have your own financial house in order. And I think that's what's happening right here. It's a consolidation, streamlining, coordination, re-empowering the central bank with the authority over monetary policy and in turn over the other regulatory organizations, and creating a stable environment for the next stage of growth. And I think that's what's happening here.
Well, during the administration of Mr. Zhu Rongji, he was able to list the 4 state-owned commercial banks in the edge share market to tackle the issue of non-performing loans. What's going to happen to the debts at the local level? What do you think should be the therapy?
Well, I mean, one thing, of course, the government has called for is these equity for debt swaps to, in a sense, do a reset for some of these companies. But I think that that's necessary but not sufficient, because you also, in parallel with that, you need to also ensure that whether it's a state-owned bank or anyone else lending money, that they're using rational, commercially driven underwriting standards. So they're making the decision based on the expected future cash flows against the enterprise they're lending to. So I think that's important. There also needs to be, as I think President Xi called for as well, just a greater investment and development of talent at the regulatory level, whether that's at the most senior levels down to the field office level, as it were.
I think one of the major challenges that millions of Chinese consumers and thousands of investors are facing at this moment is the channels of investment. Look at the bubbles in the housing market. The fiasco that we had 2 years ago in the stock market delivered a wake-up call, and therefore it raised the question as to whether it is wise for the government to step in. It seems despite the investigations pending which some of the entrepreneurs had been brought, some of them were brought to justice, but it seems it's difficult to single out the scapegoat. Some would argue, particularly those entrepreneurs would argue, it makes no point for the State Council to step in.
Well, first of all, the stock market correction or crash 2 years ago came on the back of experimentation with many different leveraged instruments that were being pushed into the market, and the China consumer market was not ready for this. There was also at that time a deregulation. You had a lot of online scams, raising funds, what they call now 非法集资, illegal raising of capital, and you had a lot of very angry consumers who lost money because of that. That called for regulation. That called for stepping in and doing something about that. Of course, now you have, as you mentioned a moment ago, you have a lot of Western critics about, oh, now you're macro controlling the economy, it's not a free market. But, before we had a slew of Western reports saying, in the Western media, and critics saying, look, you have too many ghost cities, you have too much overdevelopment, you have too many white elephant projects. That's because of extensive lending at the local level into these projects without collateral or without looking at the end game of that lending. And so now you have the government stepping in, taking control, and deleveraging the economy. And they're still criticizing it. I think it's time that the create, economic financial stability is the first step before you go into the next stage of reforms. Those reforms will come, but if you don't have a stabilized financial system, especially with looming potential of global financial crisis coming in another cycle, then your risks are too high. And I think this is all about avoiding risk and preempting crisis and creating stability for the next stage of growth.
Yeah, stability is the key word in our vocabulary to characterize what we are facing today in reform in the financial industry. Let me go to Dr. Yu Pingkang, Chief Economist at the Changjiang Pension Insurance. He's standing by on the phone. Hello.
Yes,
Dr. Yu. Sorry, we cannot get connected with you through satellite, but tell us your thoughts on how to stabilize the financial industry, because President Xi Jinping vows to not only strengthen the discipline for the ruling party, who is likely to be further involved in managing the financial industry, but also we face what happened 2 years ago in the stock market. The the intervention from State Council caused a lot of controversies. So what should be done to address the multiple challenges we are facing in stabilizing the financial industry?
Well, that's a big question. So 2 years ago, when the stock market crisis was in the background of this kind of financial innovation. But now we are facing a different kind of problem. So the problem right now we are facing is mainly in the banking sector, and to the extent is in a different nature of those fluctuated kind of financial markets or capital markets. Because in the banking sector we are not facing these kind of the risky problems that will generate the imminent crisis, but but more, we are facing a problem that this financial sector become increasingly having a low efficiency. That the whole country needs more and more of the financial resources to generate the same rate of GDP growth. So, in a sense, that the whole system becomes less and less efficient, and so that's a bigger problem we are facing. Then the reason for this is that the whole financial sector becomes a whole lot more complex than before. The structure of the financial sector becomes more complicated in the sense that it blocks the information and it requires more of these the chain of the different sectors to pass through the financial resources to pump those resources to the real economy. So that's why that's a big problem we are facing, and that's why we are creating these overseeing kind of the umbrella kind of entity to coordinate the regulatory bodies in different sectors.
Are you optimistic or cautiously optimistic, Dr. Yu, about having a soft landing in reforming the financial industry? I mean, do you believe the measures we're going to take will prevail?
Well, I think, at least I'm cautiously optimistic because, still we are not facing imminent crisis. Then so we still have time to conduct reforms. And then I think the sector reforms laid out in this plan are heading to the right direction. And also, even in the worst case scenario, we are facing the problem. For example, if there is the credit kind of crisis happening in the banking sector, we still have a lot of policy measures. First of all, right now, what we will do, particularly in reforms of the banking sector and also in the SOE sector, we will reduce the implicit guarantee by the government sectors to those large SOEs and large, government-sponsored entities, and even allow a certain amount of bankruptcy. And as a last resort, the central bank can also, as what has done by the Federal Reserve in the United States, to buy out those debts and transfer to the central bank's balance sheet. So that's why we are not facing these imminent crisis, so we still have time to solve the problem.
What do you think of Dr. Yu Kangping's analysis about the regulations? Are you optimistic?
No, I would largely agree with what he said. I mean, that the PBOC in particular has a lot of policy tools. I think the toolkit is also growing, so they're looking at developing new tools as well to better manage the financial sector and the economy. I think that clearly how much investment it takes to generate 1 RMB or $1 of GDP growth, clearly that is going down. But we can also see that as an opportunity as well, because if we think about capital formation, good investment criteria, good credit lending underwriting standards exist to help lending institutions find good projects. So I think as we become more sophisticated in China, as there's big data, there's new rules that require better underwriting, that there is actually room for optimism.
Lawrence, just 1 minute for you to make a comment.
Neither optimism or pessimism. I think these are necessary steps that have to be taken at this time. There needs to be a deleveraging of the financial markets, of the economy. There needs to be a strengthening of the macro control. There needs to be a program now to be able to get finance to real businesses and not to bubble stocks or to Ponzi schemes. And there needs to be transparency and information to the consumer so that they don't get trapped into any kind of scheme either, but that they're be able to draw upon financial services that are real and that actually meet consumer needs and the needs of businesses and small, medium businesses as well as state-owned enterprises. So it's not about pessimism or optimism, it's about necessity at this time.
And also, it's also about the sunshine policy to promote transparency and to serve the real economy. Thank you so much for being with us. I'll see you next time. Goodbye.